I have David Williams joining us from Page Trader. He's here to talk energies. David, welcome. Good to have you with us. Crude on track for its first quarterly loss in over 2 years.
Yeah, good morning, Ben. Great to be here. Crude oil continues its slide lower after making really somewhat historic highs recently. Not all-time highs, but very, very big numbers on the upside. Crude is below our level that we liked, which was $88 to $87. We felt that if they could hold above that, that would be important. They weren't able to, and crude has been unable to stabilize at that level. That is bearish to us, and crude is today trading down at $80. I think it goes without saying at this point that Russia's war in Ukraine continues to reshape the world's energy markets. This has made all the difference in the world, and we're seeing the kind of volatility that we haven't seen in a long, long time.
I'd have to agree. That was the other top story this week. In addition to the Fed, the focus was on Russia, this ongoing effort to ramp up their invasion on Ukraine, more troops, basically meaning prolonged pain, it seems like, across the board. But you have some major demand concerns as well, and that seems to be trumping what's playing out in terms of Russia. You've got these rate increases globally, and ultimately it's signaling that we could be headed for a recession.
Yeah, I mean, it's almost no doubt that we're heading for a recession. Okay. I don't know how we get out of that. One of the things about the continued increases in the Fed funds rate is that that is designed in part, if not in whole, to crush demand. If you crush demand with higher interest rates, businesses will be forced to lower their prices. That stops inflation. But it's a cruel way to stop inflation. Yeah. And I think it inevitably leads to a recession.
Painful. At this point, yes. Labor still remains pretty strong, so people are going to need to continue to fill their tanks in theory and drive back and forth to work, those that are, I guess. One could argue, but let's talk a little bit about some of the levels more specifically that you're watching. You mentioned the breach of 87, 88 is what opened up the door to the downside here.
Yeah, really short term. Well, first of all, on the quarter, which closes in just a few days here, if we're below $88 or $87 in our work, that is definitely a weaker position. Okay. Much shorter term, Ben, if crude oil is unable to test $81.40 or slightly higher on Monday, September 26, by that time it will already probably be quite a bit lower. So what this means is that normally we've seen a pretty good decline. We would expect them to test 81.40, which is a nearby number, or slightly higher. If they do that, that's interesting. That has some meaning to us. If they can't do it, it has some meaning to us, and it may prompt another forecast from crude oil. So for us, those are kind of the key numbers right now. We'll have more on crude oil for a longer-term forecast after we close out the month of September, below $88 to $87.
Such an interesting market here right now, dynamic one, as I've been calling it recently. It is, to say the least. But, for one, you see, well, prices at the pump have come off, but not necessarily to the extent that we've seen crude oil. So, and you've got investors, you've got, I should say, consumers that are cheering that on. But again, a little bit of a concern here right now because you're cheering it on, lower prices, but not necessarily if it's a reflection of an economy that's softening.
Yeah, no, well said. And, in our particular part of the country, in Las Vegas, Nevada, the oil prices have reduced the gasoline prices relatively dramatically out here in Las Vegas. And this is a harder place to get to. It's not, prices are still higher in California than they are out here. But it's a regional thing. Every region's going to have their own prices at the pump. But the prices have come down, and the raised interest rates are going to cause, as you said, it's going to be grief. It's going to be difficult for people to move through this, because part of this decline in the S&P and in the Dow and in the Russell and so on is because, not just because they raised interest rates by 3/4 of a point, Ben, but because they've made it clear that they are far from done in raising interest rates.
Yeah.